Welcome traders to this new market game plan for week 5 for Nasdaq futures. So for the coming week, we are looking at this economic calendar. On Monday, we start the day with a 10 a.m. medium impact news driver, which is the new home sales. At Tuesday at 8:30 a.m., 9 a.m. and 10 a.m. we have medium and high impact news drivers. On Wednesday at 10:30 a.m. we have a medium impact news driver, and the main headliner for this week is the 2 p.m. federal funds rate release and the FOMC statement. And at 14:30 p.m. we have the FOMC press conference as every month. So on Thursday we have the advanced GDP quarter on quarter at 8:30 a.m. At 10 a.m. we have the medium impact news driver as well. And on Friday we have a 8:30 a.m. High impact news driver and a 9:45 medium impact news driver. So if we are looking at this economic calendar for this week, I expect Wednesday to have the largest range of the week, obviously. So in the AM session, I am not trading. At 2 p.m. I'm not trading. So what generally occurs during the federal funds rate release is a manipulation move from 2 p.m. until 2:30 p.m. So a 30-minute time window where a Judas swing 70% of the time occurs, and then the real move, the strong move, starts inside this macro. So from 2:20 p.m. till 2:40 p.m. So the day prior to the funds release, we have 8:30 a.m. news driver, 9 a.m. and 10 a.m. So I don't expect too much because it's the day ahead of the federal funds rate release. So I expect a minor move after 8:30 manipulation took place and a stronger move from 10 a.m. But I'm not risking too much on Tuesday. And on Monday, something like the 9:30 till 10 a.m. fake run might occur, and then after 10 a.m. the real distribution may take place. On Thursday we have both 8:30 and 10 a.m. news, so I expect a minor move after 8:30 a.m. and a stronger move after 10 a.m. And on Friday, it's actually the same as Thursday for me, so a minor move after 8:30 a.m. and a stronger move after 9:45 a.m. So let's start on the weekly chart for now. So for last week's price action, we had an up close week, which is in line with the general high time frame institutional order flow. As you can see, we are currently drawing towards a new all-time high, but in order to get there, we need to break some levels before that to occur. So let me annotate some levels over here. Previous week high, which is also the all-time high. Previous week high of 1, 2, 3, 4, 5 weeks ago. And obviously last week's high, which carried by stops above it, just like this high, just like this high. So yeah, institutional order flow is bullish, and let's see if we can break these previous week highs over here. So if we continue to the daily chart, we can see that price left a breakaway gap over here, which hasn't been traded to yet, but that's okay. We had this Thursday down close candle. On Tuesday, we traded back into the down close candle, which is a propulsion block. We propulsed from the opening price all the way up to this price level over here. And as you can see here, we have a buy side imbalance, sell side inefficiency over here. But as you can see, there's a volume imbalance on top and a volume imbalance at the bottom of it. So let's annotate the time frame. So when we are navigating the lower time frames, you can immediately refer back to it by adding this little time frame over here. So yes, if we're looking at this chart, we can see the following. So during January, we took out, let me see, the December low, which is this low over here. We rated it and we reversed from a sell model into a buy model. And as we saw on the weekly chart, we are currently drawing towards higher prices. And we can see here that last Friday, last Wednesday, in a few weeks, the last week of 2024, we have a triple relative equal high carrying sell stops, buy stops above it. So this is my draw on liquidity for this week. And perhaps maybe on Wednesday after the fund rate release, we might use that economic calendar release report to draw towards the all-time high at 22,425.75. So if you ask me, I expect some manipulation. Wow, beautiful. Okay, this path isn't really clear, but you know what I'm saying. So I expect the low of week to be formed inside this busy on the daily chart to trap some sell stops below Thursday's low, perhaps Wednesday's low, inside the range of the body of Tuesday's price action, and then draw all the way back up into these relative equal highs and perhaps previous week high. So let's mute this indicator for now. Okay. Yeah, since the 13th of January, we are currently in the buy side of the curve. So yeah, sell side of the curve, buy side of the curve. And over here, I see a small, tiny volume imbalance. Maybe we can add this one as well. So from this candle's close, this candle's open. Let's make it pink for now. Volume imbalance, not on the daily, rather on the 4-hour chart. Over here we have a SIBI as well. So this price action was Friday's low resistance liquidity run between 10 a.m. and 2 p.m., which is a 4-hour time window where price displays to the downside. So we took we took Thursday's high and reversed all the way back down into Thursday's low. So, okay, making this a sell side imbalance, buy side inefficiency for our chart. Okay, so what I'm expecting, as I already said, is some downwards manipulation into the volume imbalance, perhaps the upper quadrant of the busy on the daily, and perhaps consequent encroachment. But ideally, I expect only this area to be traded to. Accumulate some long positions for smart money, reversing this premium array into a discount array into a bullish inversion fair value gap. When price closes above it, I don't want to see a full closure of this gap, so rather tapping into it as a institutional order flow entry drill, so beautiful tongue twister over there, and expand up into these previous week high levels over here. So over here we have a volume imbalance and liquidity void as well, but I think this volume imbalance is there because I'm using the continuous futures contract. So if we go to NQH 2025 on the 4-hour chart, you can see that this is just the buy side imbalance, sell side inefficiency. I think it is due to the rollover of the December contract into the March contract, but yeah, leaving that for what it is. Okay, beautiful. Yeah, I can dive into the lower charts, lower time frame charts, but yeah, it wouldn't make any sense for now. So we want to see how Monday is opening up, what is happening, and maybe yeah, wait till the sell side of the curve into these discount arrays turns into the buy side of the curve with a smart money reversal, and then we can see if we can capture some beautiful long opportunities for this week. Okay, traders, I want to thank you again. I'll be back next weekend for reviewing next week's price action. And I want to wish you a very nice weekend and even better trading week ahead.